What's up, everybody? This is your host, Max Pitts with Trades and Gains, and it looks like another week, another market shakeup. We're kicking off March with a crucial jobs report, major retail earnings, and tariffs on Canada, Mexico, and China about to hit. The markets have been a roller coaster with Nvidia's sell-off, Bitcoin dipping below 80K, and the Nasdaq losing 4% last week. But before we dive into the options flow, let's break down what's driving the market right now and what to look for this week. So, first things first, the jobs report. Is the labor market finally cracking? Economists expect 143K jobs added in February, with the unemployment rate holding at 4%. But under the hood, there are cracks forming. Initial jobless claims just hit their highest level of the year, and JOLTS data shows job openings are disappearing fast. Elon Musk's Doge, Department of Government Efficiency, is slashing federal jobs, which could impact employment numbers in the months ahead. 200K plus government jobs could disappear by year end. Now, why does this matter exactly? If this jobs report comes in weak, job cut bets will ramp up. But if hiring stays strong, the Fed could hold rates longer than expected. The next thing we have on deck are retail earnings. Is the consumer tapped out finally? We've got Target, Costco, Kroger, and Abercrombie and Fitch reporting this week. And here's why it really matters to the economy. Costco is a recession-proof monster. They said consumers are getting picky about spending. If Costco struggle, that's a bad sign for the economy. Target is fighting to keep up with Walmart. Stock is down 8% year to date, and last quarter's earnings wiped out 20% of its value. If they disappoint again, it's lights out for the overpriced consumer. And Abercrombie and Fitch has been on fire, up 600% in 5 years. But is this hype sustainable, or is it a flash in the pan? The key takeaway here is if these retailers miss earnings, expect consumer confidence panic, and that means bad news for the market. Next thing we have is Trump's tariffs bombshell. March 4th deadline is incoming, folks. That's literally in, 2 days? So, Trump is dropping tariffs on Canada, Mexico, and China this week. China gets hit with another 10% levy on top of the one earlier this year, and markets hate uncertainty. And this could trigger more downside for the semiconductors, automakers, and consumer goods. Now, the market impact here. If Trump escalates tariffs, expect a sell-off in industries, tech, and retail stocks as well. Now, last week, Nvidia also dropped earnings, and is it an AI boom or bust? They reported strong earnings, but the stock still tanked 9%. Why? Gross margin guidance came in weak, 71% versus 73%. Wall Street is now questioning whether AI demand is hitting a ceiling. The key levels to watch: if Nvidia can't hold 120 to 125, things could get ugly for the broader market. Now, hold on. Let me go sign into our Stacks account so we can talk about our options breakdown from last week. Now, over on the options flow side of things, let's dive into our options trades from the last week overall. So Nvidia led us with the pack with a total overall of 295 million in flow, with 166 million versus 129 million in puts. Now, our most common contract, if we go ahead and take a look at this, was the the March 14th 125 calls. So it looks like somebody knew something and was not too stressed about the Nvidia earnings report, which is not a shock because if you look at it, tech historically does not do in their first earnings reports of the years, really. Now, another big hedger and mover of the markets was SPY. We had $275 million in overall flow, with a more bearish side of the market because we had only $34 million in calls against $241 million in puts. Now, if we look at our most common strike, it was that 580 strike with the March 21st expiration date. Now, my own personal theory, don't take this as financial advice, is SPY needs to see about 575 to a 570 level before it takes any type of strong move in either direction, just because that's where a lot of support has been built over the last 6 months, and that is just my own personal opinion again. So this bearish flow very much matches that sentiment that I personally have for it overall. Now, put buying is at extreme levels, which means institutions are preparing for that drop as well. And again, that's going to come down to tariffs. It's going to come down to inflation being sticky and those economic numbers just not lining up to what the Fed wants. So we could see rate hikes possibly, which could tank the market. We'll have to wait and see, folks. Anyways, Tesla is still a problem child, but it still had a bearish or a bullish flow overall. We had 146 million in total flow last week, with 76 million in calls against 70 million in puts. And the most common contract for last week was the, hold on, let me get the Tesla. For some reason, it does not want to pull up, but it looks like can't tell you, my guys, my bad. But Tesla had overall a bullish flow. Surprising, because a lot of the market is bearish on Tesla due to European sales dropping 45%, due to probably Chinese and European competition finally, bucking up, showing that they got their own muscle, they got their own offering for a better price than a Tesla today. QQQ. Are we seeing a big tech breakdown here? We had 205 million in total flow, with 64 million in calls, but 140 million in total puts. And if we look at our most common strike price for QQQ last week, it was that $500 strike expiring on March 21st of 2025, paying $460 per contract. So the big question here is institutions are positioning for a Nasdaq decline with heavy put buying here. So does that mean we're going to probably see some more pullback in the tech sector? I mean, considering most of the Mag 7 has been underperforming against the rest of the S&P 500 when it's supposed to be a market catalyst, I would say yes. This signals that they expect more downside in those tech stocks as well. So does that mean we should probably be loading the boat on puts, maybe shorting some of those positions that we're holding shares in? Yeah, that could be a move. Could selling puts be a move if you own enough stock to fill an order? Probably. That wouldn't be the worst thing in the world, probably. If institutions are moving that way, typically that's the way you'll want to move as well. Now, if QQQ breaks this 500 level, expect a bigger sell-off in the tech industry as well. Now, let's go ahead and look at some dark pool data, folks. What is going on in our dark pools? Let me go ahead and organize this for y'all. Now, in SPY, we had 958.1 million worth of dark pool prints at the $584.91 level. Nvidia, we had 1.1 billion. 1.1 billion at the 130.90 level. And Tesla, we had a $539 million block trade at the 283.78 level. Now, what this means, Spike's dark pool prints suggest a battle at 585 to 590. Nvidia's big dark pool print could mean institutions are starting to take profit. Yes, take profit. And that's probably why the stock's going to tank for a little bit. And Tesla's 283 trade looks like an unloading, not an accumulation. Does this mean that Wall Street's losing confidence? The big guys are losing confidence in the EV maker? I don't know. We'll have to wait and see. Now, our final takeaway and game plan for this week. The jobs report is the main event for this week. Weak numbers equals Fed rate cuts are back on the table. So we want that report to come under, right? Remember that. Keep that in mind. Retail earnings could shock the market. If Costco and Target disappoint, expect more downside, because that is showing that consumer confidence is weak, which is, as we have learned, pivotal to the economy. Tariffs could spark more volatility as well. Watch China stocks and industrials specifically. And options flow shows risk off behavior. Institutions are loading up on puts, not calls. Does that mean you should probably follow the money? I don't know. That is up to you at the end of the day. And finally, dark pool prints suggest more selling ahead. SPY and Nvidia are the key battlegrounds for what is happening in the market currently. Now, trade smart, stay nimble, and be ready for some market volatility moving into this week. And that's your market look ahead for the week and options breakdown from last week. Let me know what tickers you're watching, and maybe I'll break them down and make a special video for them. And where you see that next big move coming. I know Printing Tendies probably has some spicy predictions that you should look into. But that's all I got for you this week. I'm your host, Max Pitts. Go ahead and like, subscribe, and hit that bell notification so you never miss a Trades and Gains update. I love you all. Hope you're having a great Sunday, and I'll see you in the next episode.